Welcome to the Motley Fool's CrunchTime series, where we scout out a single company from its story, its opportunities, and risks. I'll start with my prediction. I believe Starbucks will outperform the market over the next 5 years. Let's get going. Over the long term, Starbucks has been a massive winning investment. More recently, not so much. I'm going to start with business strategy. Frankly, Starbucks' strategy has some serious problems. This is the world's biggest buyer and seller of coffee, the biggest global coffee brand. More recently, sales have declined. Customers are pulling back because of a combination of issues. This includes longer wait times, higher prices, quality concerns. A lot of people are frustrated, including Starbucks' baristas. This is why Starbucks' stock is down more than 22% from its all-time high, and it's been more than 3 years since it was at that all-time high. Enter Brian Nichol, whose track record of reviving wayward food and beverage brands is unparalleled. Let's talk about the growth opportunity for Starbucks. The opportunity is both a turnaround and store expansion. Revenue fell 3% last quarter, and traffic fell 10% in U.S. comp stores after falling the prior quarter too. Nichol's job is to do what he did at Chipotle, get Starbucks' operations back on track to improve throughput and the experience for customers and employees both, while simultaneously continuing to expand the store count, particularly in markets like China and India, where coffee consumption is lower but quickly growing, but also in the U.S., its largest and most important market. Nichol is starting with getting Starbucks' house in order, reorienting back to a focus on the customer experience, simplifying and removing bottlenecks for baristas, and refining the mobile ordering business so that stores can manage those orders while also attending to in-cafe customers quickly. Let's talk risks. The biggest risk Starbucks faces right now is execution risk. It has made a huge commitment in Brian Nichol to fix its broken operations and revitalize its popularity with customers. At the same time, Nichol must continue to lead Starbucks through growth. Doing one is hard. Doing both at the same time, even harder. My prediction: despite recent struggles, Starbucks is still a powerful, beloved brand with a dominant share of the global coffee market. I believe Nichol is the best operator in retail food and beverage. While the next year will certainly have fits and starts as the company implements improvements, my prediction is Nichol will be successful in the turnaround, and a revitalized Starbucks will be able to focus on growth once again. What does that mean for the stock? As a starting point, a healthy Starbucks should be able to grow its revenue mid to high single-digit rates over the long term, and because of the operating leverage that it generates, should be able to drive earnings per share growth at an even higher rate, 8 to 10% or even more. Combine that with the dividend, yields about 2% at recent prices. I think we see a return to total returns in excess of 10% per year. Over the long term, Starbucks has been a market-beating investment. I think we can see its past, also in its future for investors. At the Motley Fool, your comments make us all smarter. Please comment with your own research and insights about Starbucks, and tell us what stock you want to see us tackle next. Go to fool.com/invest to receive the top 10 stocks to buy right now.